Did you know that Ron Barron, a wealthy investor, says you shouldn't sell your Tesla stock when the price goes down? A lot of buyers have lost faith in Tesla's stock because it hasn't done well in the stock market, but Barron is still bullish. Don't forget to keep watching to find out why. A lot of people around the world are aware of how badly the COVID-19 outbreak has hurt the world's economy. This also put a lot of big companies, like Tesla, in a lot of tough situations. Tesla is still the biggest company that makes electric cars, but its stock price has been going up and down a lot lately, just like the stocks of other companies like Apple and Google. Watch this movie to learn why Ron Barron says you shouldn't sell Tesla stock when the price is going down, even though it hasn't done well in today's stock market. Most people already know that Tesla is an American company based in Austin, Texas that makes cars and clean energy. Tesla designs and makes electric cars, batteries that can store energy from home to grid-scale solar panels and roof tiles, and other goods and services that are related. Martin Eberhard and Mark Tarpenning, two engineers, started Tesla Motors in 2003 with the goal of making electric cars. Before becoming CEO, Elon Musk led the first rounds of investments in Tesla. Musk is one of the founders of PayPal. The Roadster was Tesla's first electric car, which came out in 2008. Ronald Stephen Barron, better known as Ron Barron, is an American investor and manager of mutual funds. He also started Barron Capital, an asset management company that helps people invest in growth stocks. Ron began Barron Capital in 1982 and has been doing study for 52 years. Through the years 1970 to 1982, Ron worked as an institutional securities analyst for a number of law companies. Ron was a patent reviewer at the U.S. Patent Office from 1966 to 1969, while he was going to law school at George Washington University. Ron was a teaching fellow in biochemistry at Georgetown University from 1965 to 1966. Ron got his BA in chemistry from Bucknell University in 1965. The $10 billion Barron Growth Fund, which is the main fund for buy and hold investors, has a turnover rate of only 3% per year. Barron also has one of the largest homes in the Hamptons. He spent $152 million building it from 2001 to 2009. It's now worth a lot more. Ron Barron is worth $4.2 billion right now. There are experts who say that Tesla owners will get very rich in the next quarter. Given how the company's stocks are doing right now, this may seem unlikely. The following, on the other hand, shows that Tesla was able to deliver even though the pandemic and other world problems made things harder. In April of this year, Tesla said it had shipped 310,048 cars in the first quarter of 2022, which was 68% more than the same time last year. Tesla reported a net income of $3.3 billion for the first quarter of 2022, which was higher than what Wall Street thought it would be. The company's sales also jumped 81% year over year to $18.8 billion. Renowned investor Ron Barron has had Tesla stock in his portfolio since 2014, long before the company's stock hit all-time highs in the car industry. People were worried about Musk's sudden decision to buy a stake in Twitter. In response, Barron reaffirmed his positive view of the carmaker and said he would hold on to the stock for most of the next 10 years. He said that he would keep his Tesla stock for at least 8 more years and that Musk's investment in Twitter was pointless. Ron Barron, a famous billionaire investor, thinks that Tesla shares will keep going through the roof for another 10 years. His fund has already made $6 billion from its original investment in the company. A few weeks ago, Barron Capital CEO Ron Barron said on CNBC's Squawk Box that he wants to hold on to his Tesla stock for at least 8 more years. At that time, Barron said, "I think we're going to make 3, 4, or 5 times our money on Tesla from here." Barron said that he put $380 million into Tesla between 2014 and 2016, when the price of a share was about $40 on average. He has now gotten back about 20 times that amount, or $6 billion. The two mutual funds that own Barron's stock have sold about $1 billion worth of it. He said that Tesla now makes up about 12.8% of the fund's assets under control in order to diversify the portfolio. I believe that this is the start of something big for Tesla. Barron Capital just sold Tesla shares worth about $1 billion. Barron told CNBC about this right away, but he still has about 12.8% of all the money he manages put in Tesla. That's a huge $6.2 billion, since Tesla shares have gone through the roof in the last couple of years. Barron thinks that Tesla will be able to make 5 million cars every quarter in 10 years, which would make the company as big as Toyota and Volkswagen put together. This is because Gigafactory Texas and Gigafactory Berlin-Brandenburg were just opened. He said that he thinks Tesla will be able to deliver 1 million cars every 3 years. Tesla said it delivered 310,000 cars in the quarter. It was reported in the first quarter of this year that Elon Musk wanted to get out of a Tesla margin loan and was looking for $6 billion in preferred equity to buy Twitter. Ed Ludlow, an on-air correspondent and editor for Bloomberg Television in San Francisco and a reporter for the global business team of Bloomberg News, said this: "It's crazy that this move would turn a $12 billion margin loan into nothing." Sources also say that he said $6 billion in new equity financing, since he had just done $7.1 billion in new equity financing. We can say that this de-risked the loan by lowering it from $12.5 billion to $6.5 billion. A big part of Musk's net worth is in Tesla stock that can be used as collateral to borrow money from banks. This is why he has almost always laughed about not having enough cash on hand. If you own Tesla stock, would you follow Barron's advice and not sell? Fill out the form below and tell us what you think. A lot of investors are worried about Elon Musk's stake on Twitter, but rich investor Ron Barron is still not worried. Barron told CNBC recently that Elon Musk's roughly $3 billion stake in Twitter doesn't mean anything, and that investors should be more excited about what he thinks will be huge wins for Tesla in the future, even though stocks have had a rough year so far. For a man who was worth $300 billion, he said Musk's share in Twitter was a small investment, adding that it was only $3 billion. Some experts think Musk might become even more interested in Twitter. Barron, on the other hand, thinks that the investment is actually helping his marketing, and that he won't be able to take his mind off of projects at his two companies, Tesla, which makes electric cars, and SpaceX, which makes rockets. Barron, who has a personal interest as one of Tesla's biggest shareholders, sees the company's huge potential for growth. He says he will hold on to the stock for at least 8 more years and still expects to make 3, 4, or 5 times our money. Like it was already said, Kevin O'Leary is a Canadian businessman, author, politician, and head of O'Shares Investment Advisors and Beanstocks. He said that when everyone else is selling is when you should buy. He said that this move or plan was like the lemming effect. According to psychology, the lemming effect is when large groups of people in different areas of life act in a certain way, just because most of their friends do the same thing. O'Leary said that even though tech has been cut in half, companies' growth rates have not slowed down at all. He also said that there is no proof that medicap growth rates have slowed down. Barron, ARK, Invest, and other big names in the internet world think that Tesla will be able to make at least 5 million to 10 million cars by 2025. ARK Invest is an American company that will handle your money and has $60 billion in assets. Cathie Wood, an American businessman and famous stock picker, started the company. In fact, they updated Tesla's valuation model and set a price goal of $4,600 per share for Tesla stock in 2026, with the possibility of going up to more than $20,000 by 2030. ARK's updated open-source Tesla model predicts that each share will be worth $4,600 in 2026. Also, like Barron, Wood said she is not worried at all and sees Musk's Twitter stake as him exercising his choices because there will be tax consequences for how he manages his wealth. Her words are that Musk is doing this to pay those tax bills. It was even put down by Trip Chowdhury, co-founder of Global Equities Research, that the second quarter of 2020 is going to be a monster year for Tesla. According to the website Inside EVs, which lists electric cars, It's not like Chowdhury is a normal analyst who only uses models to guess numbers or just refer. First, some new news or Twitter. Based on what they said, Chowdhury is likely the only analyst who regularly visits the Fremont plant. Further, David Lee, a well-known YouTuber whose channel covers everything there is to know about investment, is still very positive about Tesla stocks and says that he is in this for the long term. He also made it clear that he is sure Tesla will grow astronomically by 2030. At the end of the day, it's your choice, and these experts and investors are just giving you their thoughts to help you make your own decision based on the facts they give you. For more Tesla movies, go to our channel and watch our other videos.